some ways to protect yourself from the volatility in the market? Well, here to talk with me about this is Philip Herzberg from Team Hewins. Philip, welcome.
Grateful to be here, Bob. Thanks for having me.
Pleasure. So you recently wrote an article about this very topic for Retirement Daily. We're eager to have you walk us through it.
Absolutely. The best protection from market volatility is to stick to your long-term financial plan. And as the stock markets dive and inflation is at a 4-decade high, it's human nature to want to take action to protect plunging account balances. And we tend to act rashly in times of financial stress. And our national inclination is to panic and hide money under the mattress, which leads to lousy outcomes. So here are 4 proactive planning moves to consider now. First, you're going to want to pay down costly debt and build emergency savings to help you withstand rising interest rates and economic uncertainty. Second, you're going to want to consider a Roth IRA conversion. Third, capture a tax benefit by leveraging tax loss harvesting. And finally, fourth, you ramp up tax advantage retirement savings for long-term investment growth.
Right. So let me go back to your first tip about paying down costly debt. What in your mind qualifies as costly debt?
Well, surging interest rates mean borrowing costs more these days, and costly debt is expensive credit card debt. And as far as paring back that expensive credit card debt, you'll want to take the following 2 steps. First, you're going to want to consider calling the credit card issuer to consolidate balances or request a lower rate. Second, you're going to also want to pay off high interest credit cards with a lower interest home equity loan, or you're going to want to switch to an interest-free balance transfer credit card.
Right. And then with respect to an emergency fund, we've heard lots of different theories about how much one should have in an emergency fund in terms of the number of months or years. What's your thought on how much one should stash away for living expenses for an emergency?
You're going to want to stash away more, and that means 12 to 24 months of living expenses in these uncertain times and cash reserves to tide you over in the event of an unexpected medical emergency or job layoff. And that cash cushion will give you more time to strategize a next career move after a job loss, rather than feeling the pressure to accept your first job to cover the bills.
And then your second point about you considering Roth IRA conversions, there are a couple reasons for that. One is that the market is down, but 2, tax rates are low as well.
Yeah, absolutely. And the recent stock market downturn has made the Roth IRA conversion much more appealing for those who are well positioned to take advantage of this strategy in a historically low tax rate environment. So, Bob, you gave the 2 win-win reasons why. And again, the first is the market decline enables investors to convert more assets and enjoy tax-free growth inside the Roth IRA with the eventual stock market rebound. And second, another Roth conversion incentive, as you mentioned, is a lower tax bill, as the liability for a conversion will be cheaper now than it has been when the markets were higher. And
Right.
Case in point here, just to give you an example, you have a $100,000 pre-tax IRA that has declined 25% with the market downturn to $75,000. So if you do a Roth conversion, you only pay taxes now on $75,000, which is a lower balance, rather than you would later on $100,000, which is a higher balance.
Right. And I think it's worth noting, Philip, that sometimes folks don't need to do, it's not all or nothing necessarily. They could do a full Roth IRA conversion, or they could do partial conversions over a number of years.
Absolutely. You could also do a partial Roth conversion within the same year. So it's not, again, an all or nothing proposition, and you have tremendous flexibility with this strategy when it comes to the retirement income with possible future tax-free withdrawals of any Roth account earnings. So talk to your qualified advisors who can run the tax projections before proceeding with this Roth IRA conversion.
Right. And tip number 3, you mentioned, again, as a result of the falling stock market, leveraging tax loss harvesting to lower your tax bill. Now, talk a little bit more about that one.
Sure. And with with capturing that tax benefit, you're turning market lemons into lemonade. You're taking advantage of what's the strategy of tax loss harvesting to lower your tax bill while staying invested in the current markets. And there are two notable benefits with this tax loss harvesting technique. Number one, you are selling a security that has declined in value, and you're simultaneously buying a similar but not identical security to capture the upside when the markets recover. And second, if the losses exceed annual gains, investors can utilize the remainder to offset $3,000 of ordinary income, such as compensation for federal taxes. So any losses that are left over can be carried forward into future tax years to offset capital gains or ordinary income.
And then tip number 4, many folks with the market being down may be tempted to sell, as you noted at the outset, that people are fearful of what's going on, but now's the time to do the exact opposite, to boost your retirement savings. Talk a bit more about that one too.
The stock market is on sale. Market downturns are a golden opportunity to direct any cash flow surplus to purchase stocks at significantly discounted prices in your 401k, as well as your IRA and Roth IRAs. Also, you can do the same as well in your taxable investment brokerage accounts. So it's important here, focus on time in the market, not market timing, and do not be tempted whatsoever to sell in your retirement account with stocks that have fallen in value.
Phil, we've covered a lot of ground. Anything we missed or anything that you think bears reemphasizing?
Yes, missing out on the recovery in the stock markets can hurt overall performance.
Well, Philip, as always, I want to thank you for sharing your knowledge and wisdom with our readers and our viewers. It is greatly appreciated.
My pleasure, Bob. Thank you for inviting me on the show here.